How's it going, guys? Today, AMC has had a major thing happen, and I think you guys should know about it. If you guys are aware, AMC did close today. It closed a little bit lower than it did before, but why is that? Well, we have a couple of reasons why. So, and the market, when it was open, it closed 4% lower than when it's closed the day before, and that is at $8.58. It's right now currently struggling in the after hours because it does not seem to be moving very much. I'm going to keep that chart up there for you guys to look at, and we are going to look at some AMCDD from our AMC stock. 100% fact that we know about today. We know by the end of the day their move. If they deliver the 14 million shares from Friday, they will more than likely deliver end of day. If they don't, it'll be a failure to deliver. We're also going to talk about the SEC's definition of the fail to deliver, so you guys can feel a little bit like a lawyer. They'll start paying interest. My guess is that they're doing everything they can to drive the price down today to scare as many people as they can. Are you scared? Professor Meatball, are you scared? I don't think so. Watch your screen near market close. No matter what, we'll know their move. They have to deliver today or have a failure to deliver and begin paying interest. Okay. And an update from after hours. The latter has happened. They failed to deliver, which we knew might happen. They will begin paying interest for fail to deliver. As myself and another Redditor agreed, they will probably rather pay interest than have the possibility of AMC reaching $12 by Friday, because that would mean a significant number of calls that would be expiring in the money, adding to their tab. With that said, those shares will not just disappear. They have to eventually deliver. To save themselves time and the headache of trolls, they'll give you the source to the info, and we're going to talk directly about it right here. Naked short sales. This is from the sec.gov/investor/pubs/regshow.htm. In a naked short sale, the seller does not borrow or arrange to borrow the securities in time to make delivery to the buyer within the standard 3-day settlement period. As a result, the seller fails to deliver securities to the buyer when delivery is due. That's a fail to deliver. Failure to deliver may result from either a short or a long sale. There may be legitimate reasons for a failure to deliver. For example, human or mechanical errors or processing delays can result from transferring securities and physical blah blah blah. Thus, it doesn't have to be exactly your fault is what it's trying to say. It doesn't have to be malicious. However, we know that because they're trying to prevent AMC from reaching its true moon potential, that it is a malicious failure to deliver. Here is the most important sentence. A fail to deliver can result from naked short selling. For example, market makers who sell short, thinly traded, illiquid stock in response to customer demand may encounter difficulty in obtaining securities when the time for delivery arrives. All right, so we also need to look at compliance with regulation SHO. It began on the January 3rd in 2005. It was regarding persistent failures to deliver and potentially abusive naked short selling. As initially adopted, regulation SHO included two major exceptions: the grandfather provision and the options market maker. If you guys want me to cover those as well, I would love to. That just takes a little bit more of a wrinkly brain to wrap around all of this legal mumble jumble. And I am not a lawyer, nor am I a financial advisor, but let's look at Rule 204, the closeout requirement. It requires brokers and dealers that are participants of the registered clearing agency to take action to close out failure to deliver positions. Closing out requires the broker or dealer to purchase or borrow securities of like kind and quantity. The participant must close out a failure to deliver for a short sale transaction by no later than the beginning of a regular trading hours on the settlement day following the settlement date, referred to T plus 4. And we remember T plus 2, T plus 3, T plus 4, T and plus nothing. That was a lot of the conversation that Mr. Vlad, I was born in Bulgaria, talked about in the congressional hearing about GME. So this will likely also refer back to GME as well. And now for probably a question, well, if they're doing this maliciously, even though the SEC clearly has shown that sometimes you don't have to do it maliciously, sometimes it could be an accident, is naked short selling abusive or illegal? Well, when considering naked short selling, it's important to know which activity is the focus of discussion. Selling short stock without having located stock for delivery at settlement, this activity would violate the regulation SHO we just covered, except by short sales by market makers engaged in bona fide or bona fide market making. Market makers engaged in bona fide market making do not have to locate stock before selling short because they need to be able to provide liquidity. All right, so that is one way that we can get around. But the other way is selling stock short and failing to deliver shares at the time of the settlement. Rule 204 requires firms that clear and settle trades to deliver securities to a registered clearing agency for clearance and settlement on a long or short sale in any equity security by the settlement date, or to take action to close out failures to deliver by borrowing or purchasing securities of like kind and quantity by no later than the beginning of regular trading hours, blah, 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 blah. All said is short is done is that there are ways that this naked shorting can be legal, even though it is sus as heck. It even has questions like, is naked shorting the reason my stock has lost value, which we have covered. It certainly is a way that hedge funds can make the price of a stock be less than it actually is fairly worth. And then we have questions like, do all failures to deliver reflect improper activity? If you guys want to read it yourself, I will include this link in the description below, but please ask yourself this. Like, if the SEC has already given all of these ideas of like, well, is naked shorting illegal, then why is the system like this, right? We have to make a better system, and the next congressional hearing, which I will be live streaming, is hopefully going to address a lot of these improper activities. Now that we know they are engaging in this, we have to really be truly careful what the next step is. Is AMC and GME under attack? Yes. But the way that we handle it and the way that we will maturely tell this story, the history of our grandkids and their grandkids, is going to be important, and you get to decide. Tell me in the comments what you think about this. Tell me about what you think about AMC riding the rocket to Tendytown in a very, very soon time. And most importantly, tell me, is this exactly like how the SEC said that phantom shares and synthetic longs are illegal back in 2013? That is basically them saying, do not do this, make a bomb, do not do this, this illegal activity, and here's exactly how you can do it. This kind of behavior is sus, and we shouldn't allow it to happen any longer. And if you agree, I want to hear it down in the description below. For now, but not for forever, hope you have a nice day.